It looks like the first glass is a martini with an olive and a lemon, and I think you don't think Home Depot is a lemon.
I don't, Ty. I'm a little parched when it comes to Home Depot. When we think about essential names or epicenter names we talk about, Home Depot is one of those names. And when you compare it to Lowe's, Ty, it's 3 times the market cap. So we do see oversold conditions on a year-to-date perspective. Home Depot is down 25% and Lowe's is down 20%. But we have to remember the last 3 years, a sensational run. And what's interesting, as we were talking earlier with the Rickster about the 10-year note pulling back 20, 30 basis points since it recently touched 2.83, maybe that reinvigorates some people who are considering some home projects. So I want to be a buyer here. It's also interesting to see all the different ETFs, all these different ETFs that own Home Depot. There's about 300 of them, Ty. SPY being the biggest one, holding about 12 million shares. So I think there's any opportunity of a dip here, Home Depot will be bought over Lowe's.
The next one looks like it's it looked like a margarita, and I think it is Pulte. Right?
Oh, Ty, you know I have a soft spot for margaritas. Absolutely love them. But I think inside of the home builder, specifically here, we have to be really considerate. Look at XHB. That's the broad swath ETF we utilize, and it's down 30%. That's twice. That's double what the QQQs, the NASDAQ 100 is year to date. But again, if you look, the last 3 years, it's been sensational move higher. There is a supply issue. No doubt about it here in the heartland of America, in Chicago, we have zero supply. So if we look at Pulte, it's interesting. They only have about a 25% exposure to first-time buyers. I think that's a big deal. So if you look at a comparison of its peers, I know it's a smaller market cap, Ty, but Pulte, I think, has the opportunity to move higher. And I know JP Morgan just reduced its price target from 57 to 48. So instead of looking for this stock to go up 35%, they're only looking for a 15% pop, but I like Pulte, and I do like the interest rates. I believe, and this is my opinion, Ty, that interest rates pull back, that's going to help Pulte short term.
It's going to help Pulte, right, sure. If rates fall, absolutely, it'll help them. But, Jeff, it's interesting because this is not, to use the Peter Anderson term today, not linear, your point of view on the housing market. So you think the home improvement stocks will kind of be okay. The builders, maybe this is an opportunity if you have a little bit of a longer term, horizon. But the lending stocks, you would still, and that's our final one today, which we should mention, the lending names, those you would totally avoid. So what do you think is going to happen with the housing market overall here in the next 6 to 12 months?
Well, I think it's just sensational. And if we take a step back for a second, Kelly, look at the 10-year note. It started the year just 4 months ago at 1.53%. Yes, 1.53%. And here we are 120, 130 basis points higher at the top tick of 2.83. So that has been a lot of profit taking, put a lot of these different stocks into price discovery mode. But if you look at the loan, if it's Rocket, there's a reason why Rocket and Loan Depot are struggling. It's understandable that the interest rates have really hampered them, but there is a lot of pent-up demand. I just look at this, Kelly, as like a Zima with a lime in it. A lot of my Notre Dame football players, if you lost a bet in college, that was the drink of choice, a Zima with a lime. But I don't want to touch that Zima with a lime. I don't want to touch any of these names due to the fact that it doesn't feel like the bottom is in. It's a higher beta. If you look at these names, these are micro caps, Kelly. These are $1 billion in market caps in comparison to a Home Depot of $320 billion. So if you have the stomach for it and you want to catch a falling knife, that may make sense here, but I want to avoid this sector because it's just too high beta and too high risk as there's so much uncertainty with Fed policy and where the interest rates will settle up for the rest of the year.
Is there a moment where that might change your opinion here?
Yeah, if we could see the velocity of the move and the Fed get a little bit of control of the marketplace, we've never seen. I've traded 10-year notes in the 90s and the 2000s. I've traded a lot of different market cycles, Ty. I've never seen a velocity in interest rates, specifically the long end of the curve to this extent. Right. So if we get some tranquility and we see the 10-year note pull back to maybe 2.25, 2.30, I will change my mind on a Rocket or a Loan Depot. But again, this is a different animal. It's a very high beta, highly volatile type of stock, which you can be rewarded in, but you have to be tactical, and you have to be disciplined, you have to use stops in a stock like that.